Renting your property to family, that could quietly cost you money in tax. Most landlords treat it like a normal rental, but HMRC doesn't. If you rent to your children, your parents, your siblings, or anyone connected to you, there are special rules. And if you get it wrong, you could lose tax relief, be unable to claim losses, and overpay tax. So let's break this down. HMRC calls this letting to a connected person. That includes close family and relatives. The key question is simple. Are you charging full market rent? Because if you're not, this is where the tax trap starts. If you charge below market rent, HMRC treats it differently. They see it as not a fully commercial letting. Let's take a simple example. Market rent is £1,000 per month. You charge your child £500. That's £6,000 income per year, but your expenses might be £10,000. Normally, you would claim a £4,000 loss. But here's the problem. You cannot create a loss. HMRC restricts your expenses, only up to your rental income. So, if your income is £6,000, you can only claim £6,000 of expenses. The extra £4,000, you lose it. You cannot carry it forward. This applies to repairs, insurance, agent fees, and mortgage interest relief. Everything is capped. Why does HMRC do this? Because otherwise people would rent cheaply to family, create losses, and reduce their tax bill. So HMRC blocks that completely. Now here's the key difference. If you charge full market rent, even to family, normal tax rules apply. That means you can claim full expenses, you can create losses, and you are treated like any landlord. But it must be genuine market rent, actually paid, and properly recorded. Here are the common mistakes: charging mates rates, claiming full expenses anyway, assuming it's fine because income is declared, and not realizing losses are restricted. This is where HMRC starts asking questions. Here's a real scenario. A parent charges for £100 instead of £900, claims £8,000 expenses. They think they've made a loss. HMRC says, no, expenses restricted to income, that loss disappears. Now, renting to family can still make sense. You might want to support them, help them save, or avoid empty property. But it's not tax efficient. It's a personal decision. So here's the key takeaway. If you rent a family, charge full market rent. You get full tax relief. Charge below market rent. Your tax relief is restricted. There is no middle ground. If you're renting to family and not sure about your setup, it's worth reviewing it properly. We deal with landlord tax every day, so you don't have to. Email info@yourtaxhelp.co.uk and follow for clear UK landlord tax advice.